Hey, what's up you guys? This is Junior Trader, and in this video, should you just buy the semiconductor stocks right away now without thinking too much? We do have big cap tech stocks spending a lot of money on the AI infrastructure. You name it, Microsoft, Google, Meta, Amazon, they all are pounding the table to spend billions of dollars on AI infrastructure. And that's something you can see in the price action of these semiconductor stocks. So in this video, we'll take a look at NVIDIA, AMD, SMCI, ARM, and Micron. Some are direct benefactor of those spendings, and then there is ripple effect into other semiconductors as well. Now, guys, I want to request to please hit the like and subscribe if you find my videos valuable and helpful. It goes a long way and helps out the channel a lot. And also, none of this is any financial advice, only for education purposes, just sharing my opinion. Please do your own thing. So we'll start off with NVIDIA. So as per my last video, I mentioned that as we are losing 184, I expect weakness until at least $170 area. I am not foreseeing much more downside beyond that right now. 170 is what I mentioned because I'm not long-term bearish on NVIDIA. I believe we will eventually find a bounce here. This is not a long-term bearish place, just a multi-day weakness. And then price action can stabilize here. Compound that together with all these, big tech stocks spending money on AI infrastructure, it is helping the boost as well right away in the price action at these technicals levels. So as you can see, NVIDIA is already pushing up. Technically, it's already in the strength, multi-day strength. Now, how to trade this thing would be, well, technically, if you took a day trade, if you have access to my tools, they would have helped you to take the trades. And now from here on, as we can close today above $180, already above 176, we were back in the play for the day trade to the upside rebound. And multi-day also it started bullish above 176 and 80 cents. And as we today can close above $180, which most likely we will, just hold your position, some of it at least, over to the next week. That will become your multi-day trade, and the next leg you are watching is breakout above 184 all the way to then 194 eventually. And maybe with this time we can push up through, but remember that $195 is previously where the bears or short sellers have been, and they have held that zone multiple times. So, but anyhow, things are looking good. We have done the technical confirmation at the 200 days moving average around with the prominent demand zone. We had a lot of price reaction over there, and thus with all that catalyst coming from the big cap stocks, big tech stocks I should say, it's adding that fuel to this push to the upside on to begin with, like NVIDIA especially. So yeah, things are looking just fine on NVIDIA. AMD is another one. So AMD, guys, I mentioned it's very similar scenario like NVIDIA, that yes, we are multi-day weakening, we are bearish multi-day, and technically still overall not strengthful that much. However, I said that once we get closer to these zones 196, and since 200 days moving average is coming from underneath, I'm not bearish like a long term bearish. I'm near term bearish, and that happened. Now AMD is bouncing up from 197. Even though it's bouncing up, it's an important zone. That's why I have a zone that marked there. Even though it's bouncing up from here, I won't take it full on very bullish. It has a room to rebound until 227. If you are taking this trade, I will only focus until here, 227 for now. And you will have to have a stop loss below 195. But AMD, then as if it stays closer to 227 and push through, then you can continue to hold remaining position, but consider taking partial profits around 227 if you start to see weakness there. But yes, the multi-day rebound has started on this thing as well to the upside. And as we continue to, as I said, the blue box, we stay above it, it has a room to continue to push higher. But unlike NVIDIA, AMD is a little bit more in a rebound right now. I won't go like super bullish. It has a lot of room to just give you some trades, because I do believe it may a little bit stay sideways for a good amount of time. But hey, strength is coming in, take advantage of that. All right, now let's get to ARM. So this is where, you know, you may realize that you need to hit the notification bell as well on my channel, because, and subscribe also, and hit the like as well also, because when I did this video on my channel, okay, on ARM, just bullish, okay, just buy, you know, it's gonna go up strong. But I didn't get much views on that video, okay, because you haven't hit the notification bell, and maybe some of you haven't subscribed either. So do both, hit the notification bell as well so that you are notified, and please subscribe as well if you don't want to miss out, because you just missed out 10% of the move in a day. Okay, you just missed out just because you didn't see my video. All right, so I said that ARM is just bullish, all right, and 109 above, and you can see how bullish we are. We are just continuing up, and we are already at 121. Our target for now remains 130 to 137 area, at least for now. I do consider it will push through there, but I'm just giving you the next zone that I'm watching, and then after that is 185 most likely. Excuse me. I think at 185 I'll like to take a lot of profits if we get there. I'm not saying we're gonna get there if we get there, but technically that's our direction, that's our bias right now. ARM is looking good and strong, loving it. All right, SMCI is another one. This one, I think many of you have watched this video, so you know. And yesterday was a little bit of a bummer, but that's okay. It's just a gap fill yesterday. And SMCI still remains bullish for us, guys. 32 area above, everything is just fine. We are recapturing that, all good. $41 still remains the target for us. Okay, SMCI is also in the bullish structure, and nothing to worry here. If you have access to my tools, I'll show you here. This is another tool of mine, easy day and swing trading tool. So if you have access to my tools, you already knew things are bullish here. Okay, and the red candle yesterday was not too much to worry about. All right, so, and if you need access to these tools, guys, as I said, details are in the description of this video. Okay, so all good on SMCI as well. All right, we are looking to push higher. We held 32, yes, did dip lower, but that was a gap fill, and I just showed you on my tools as well. Structure still remained bullish, and we are seeing a continuation. I just turned it on again, turn it off. All right, so let's get to Micron, and with that we'll wrap up this video. Well, we'll take a look at S&P 500 and Nasdaq 100 as well real quick. Micron, I'm not too keen on buying Micron here, guys. Okay, I consider this may slip lower at this point. It has extended itself quite a lot. I am not a big fan of chasing these things, and I'm not a big fan of after extension buying into the pullback. This has a room to make a lower high somewhere here like that. It has a room for that. I would not touch it. Let's get to the hourly interval, because we are in the multi-day weakness on the hourly interval. All right, so we once, yeah, 412 is what we lost, and below that we are in the multi-day weakness. And yeah, so no, don't, again, like if it can get above 412, it can get back into strength again, but I would suggest, yeah, it has run up its course right now, a little bit stay away. Sure, it can go up, but is it worth the risk and the reward? No. Okay, I think it has run up quite a lot, and multi-day it's in the weakness right now. So yeah, I would not touch it. Let's get to 4 hours interval for a second, because I want to see something here that, yeah, so what you can do also is on the 4 hours interval for reference. Yeah, let me actually bring up this trend line here real quick. So you can use this trend line here. It's almost forming a pivot here, so it has a room to stay negative. And as you can see, we have almost lost that reference trend there for the upside. So yeah, I'm not a big fan of buying at these extensions and through the pullbacks. Yeah, it can stabilize here. It's not like overall bearish, it's definitely in the multi-day weakness, but yeah, it's a break of a structure, so risk to reward is not favoring it. Just my opinion. You can do whatever you like, guys. Okay. All right, that's all I had for you. Well, no, not that quick. We will take a look at S&P 500 and Nasdaq 100 as well here. Okay. So S&P 500 is, you have to trade it with other big cap tech stocks. Okay, it's technically it's not that bad. S&P 500 though, it's in the weakness. Below yellow zone is technically in the weakness overall. It's a rebound today. Okay, it's a rebound. If it can regain above yellow zone, all positives, kudos to it. But it has gone really choppy. It's also waiting, seems like, to catch up with 200 days moving average. But at this point, your opportunities are more in the individual stocks than in the S&P 500 and Nasdaq 100. This is Nasdaq 100, and this thing is much more beaten up here. So this is not really even recapturing and like upside like S&P 500. I would say that S&P 500 has been really strong, regardless of all other big cap tech stocks falling. But not all big cap, but majority of them. But we have like here Nasdaq 100 is still weak, and we are still in the decline, still in the downtrend technically. So yeah, it's still negative technically, Nasdaq 100. So but you will have to trade these things with the big cap stocks as well. But indices, these are your opportunities to buy in the dips. Okay, the indices, don't go all in at one place, slowly and slowly do it. But anyways, guys, that's all I had for you in this video, and with that, we'll see you in the next video. Take care, guys. Bye.